Can we figure out the top or bottom of the market? कैसे पता चलेगा कि मार्केट में कब टॉप और बॉटम बन रहा है? How will we know that? You see, according to Warren Buffett, who is the greatest investor of all time in the world, according to him, we get to know that it is nearly impossible to predict the top or bottom of the market. That's right. You see, at a given point in the market, we can never actually analyze whether the market will form a top or bottom and reverse or continue in its direction. That is simply not possible. But let me tell you that there is something in technical analysis, some concept in it, which helps us identify and pick up the stocks in which a top or bottom is recently formed. Yes, this is right that we cannot predict the top or bottom of the market, but we can analyze and trade on it after it is formed. So that concept in technical analysis is basically a chart pattern which is double top and double bottom. You see, these are the two types of chart patterns that will help us figure out the stocks where a top or bottom is recently formed and the market is going to reverse from there. So in this video, I have explained every single detail that you need to understand about double top and double bottom chart pattern. Exactly from how to identify this pattern, where to buy on it, where to sell, where to place the stop loss, where to add more quantity, what will be the risk, everything in this video. So if you want to learn some extreme knowledge about the market, if you want to take your trading to a next level, you don't want to skip this video. And if you find anything valuable in this video, anything that can add value to your trading, make sure you subscribe to this channel. And so, I welcome you to Tradingfyive, the channel that provides you with various informative content on stock market and technical analysis. And by not wasting much time, let's start with the video. And let us first understand what is double top pattern. You see, double top pattern is a bullish reversal pattern. You see, the double top is a bearish reversal pattern. What I mean by bearish reversal is that after formation of this pattern, the uptrend will be converted into downtrend. That means the bears will be taking over the market. Now as you can see on the screen, this is a top which is formed in an uptrend, which is also called as the higher high. And according to the law of uptrend, the pattern of uptrend, which is higher high and higher low, the price should break the top and move upwards. But what happens in this pattern is that the price takes a resistance on the top, which is going against the flow of the uptrend. And here we get to know that the market is actually forming a top over here. And a bearish reversal, a downtrend can be expected after that. So you see, this is how the double top pattern usually looks like. You can see there are two tops in this pattern, which is why it is called as a double top pattern. And this pattern is also referred as the M pattern, as it resembles the letter M. Okay, and you can see the uppermost part of this pattern is called as top, and over here this line is called as neckline. You see on the screen, that is the line below the lower low is called as the neckline. So this is the basic structure of double top pattern. Okay, so you can see there are actually two ways to trade on this pattern. First is when the price takes a resistance on the top, we will short the trade after that. This is first scenario where you can actually trade on this pattern. Another one is when the price crosses the neckline. You see, that's how you actually trade on this pattern. You see, these are the two ways you can actually trade on this pattern. In the first scenario, when the price takes a resistance on the top, we will execute 20 to 30% of our quantity. And after the price crosses the neckline where the pattern is more confirmed, we execute the rest of the quantities. So let's say you want to execute some 100 quantities in a stock with this pattern. So in first scenario, you will trade some 20 to 25 number of shares. And when the price crosses the neckline where the pattern is actually more confirmed, you will execute 75 to 80 number of the quantities. And the stop loss, which is very important in trading, which is very necessary in covering your loss, you will place that exactly above the top. So in case if you go wrong, in case if there is a pattern failure, you will exit with a very small loss. Okay, so this is how you actually trade on this pattern. One thing which I can say is a prerequisite for this pattern is that before formation of this pattern, the market has to be in an uptrend. Now listen this carefully. If the market has to reverse from uptrend to downtrend, it is necessary that first the market has to be in uptrend. The double top pattern which is formed after an uptrend is the most accurate. If this pattern is formed in sideways or in a downtrend, it will be very rarely significant. So remember that for the accuracy of double top pattern, for the perfect accuracy, the market first has to be in uptrend. Okay, so now let me give you a pro tip, a very small and important detail in this pattern. That is exactly over here where the market takes a resistance on the top. You will see some reversal candlestick pattern like the bearish engulfing, bearish harami or evening star pattern. This is exactly where you have to find the reversal patterns. And if in case you don't know about any reversal candlestick pattern, I have made a separate video on it. The link will be flashing above or you can check out the description. Now let us move to our next pattern, which is double bottom. You see, the double bottom pattern is just opposite to the double top. It is basically a bullish reversal pattern, which indicates that there will be a reversal in the market wherein the downtrend will be converted into uptrend. The bulls will be dominating the market. And now as you can see on the screen, First, the market is in a downtrend, and after forming a low exactly over here, we know that in order to continue the downtrend, in order to continue its pattern, that is of lower high and lower low, it has to break this low and form another low, which is again lower. But instead what happens is that the market takes a support on this level. But you can see on the screen, instead of breaking this low, the market takes a support on it and after that gives a bullish rally. So this is what is called as the double bottom pattern that you can see on the screen. It has two lows, two bottoms, and that is why it is called as the double bottom. And over here, this line is called as the neckline. So you see, that is how the structure of double bottom looks like. And let me tell you that on this pattern, there are two scenarios where you can actually buy the stock. First one is after the price takes support on the low. This is where you will buy the stock, you will execute 20 to 30% of your quantity. And after that, when the price crosses the neckline, you will buy again by executing the rest of your quantities. So you see, this is how you actually split the quantity. This is how you do positive averaging in the market with greater confirmation and accuracy of the pattern. And on this pattern, you will place the stop loss just below the low. And if the pattern works correctly, if the analysis goes correct, you will make a really huge profit. Okay, so this is all in this video. I hope you caught the concept of double top and double bottom. If not, you can maybe watch it again. And if you want to open a Demat account with India's leading broker, Upstox and Angel Broking, I have provided the link in the description and comment box. So lastly, thank you for watching this video till the end. If you like the video, please hit the like button. Share this video as much as possible. And do not miss such many contents on stock market and technical analysis. Make sure you subscribe to this channel. I will see you in the next video.